We've got Simon Godfrey, who's an investment specialist for the emerging markets region with BNP Paribas Investment Partners. He joins us on the show from Hong Kong. Now, Simon, to begin with, people are increasingly in India expecting this year's budget to be more populist and less prudent on policies due to the manner in which the Congress has fed in the state elections. What's your take on this?
Well, actually, there are two interpretations really to make. Firstly, we could say that the elections have given a signal to the government on their current policies, as in not being populist enough, so they should become more populist and spend more money, and that would necessarily mean increasing the fiscal deficit. However, on the other hand, you could also say that these elections in themselves are not just about what the central government is doing, but may also be making some other messages there. And actually, the government should ignore this today, and when setting the budget, what they should be looking at is reducing the fiscal deficit and making some fiscal consolidation for the next year, because that is going to create the necessary conditions for growth. And we all know that that is what India needs the most, and that in itself will be a populist goal. So I think the second interpretation is the one we'd certainly hope for, and rationally is the one that could be the most likely.
So, Simon, how much firepower do you think the Indian government has on the fiscal front to continue affording subsidies? Do you see the finance minister detail a roadmap to reduce oil, fertilizer and other subsidies?
Clearly, the leeway of the Indian government is not huge, and this is why they have to be very careful in terms of balancing a lot of different moving parts here. So we do think that they will have to do things in a very gradual way, but where they will get help from is if the growth cycle does improve. That will, of course, increase things on the revenue side. They can fine-tune some of the excise duties, some of the taxes, for example. On the side of actually cutting expenditure, they do not have that much leeway at this stage. So we do think that it's a gradual approach, but they need to be decisive and also make a very decisive message.
Right. And Simon, in the current political setup, do you see this budget laying out a roadmap for reform measures over the course of maybe the next 2 years?
There is already a strong roadmap for reform measures. That's also been part of this government's mandate. So certainly the last 2 years have not been very kind to this government in terms of the external environment, and also some of the issues with inflation, which were worse than expected. So the next 2 years there is really a make or break for them, and we believe they will have to increase the efforts to stick to their reform agenda and show that a lot of what has happened is water under the bridge, and they can actually move forward more positively now.
And Simon, on the fiscal consolidation front, what, as per your mind, do you think should be the government's approach, and how can they increase revenue and reduce any wasteful expenditure?
Yeah, I mean, in terms of increasing revenues, they need to have the cycle on their side. We do expect that the last quarter figures of GDP growth, we hope that this will be a bottoming out, and going forward with greater liquidity in the system, with just the cyclical aspects turning upwards with inflation coming down, that actually on the revenue side, that growth will be a big help, but they can also fine-tune in terms of bringing back some excises, some taxes that were cut in the financial crisis. So they can bring some normalisation or consolidation on the revenue side. In terms of wasteful expenditure, that's where the reform agenda comes in, and unfortunately it's very difficult to reduce expenditure. In terms of the framework of how that's being spent, this will be more of a medium-term issue, because of that's how long reforms take, and obviously where it's difficult to reach consensus, reforms will take longer.
Right now, Simon, the government has severely fallen short of its divestment target for the current financial year. Do you see the next year any different And would you say that they've learned their lessons, for instance, from the ONGC fiasco, so as not to repeat similar mistakes as we go into FY13?
Again, divestment is a very important part of what the government intends to do. So we do expect them to press on with the divestment programme. We've seen figures of around 300 billion rupee, which is earmarked for divestment. So when conditions are right and when all the interests are aligned, we do expect for the government to be able to continue on its intention of divesting assets, and that will be a positive factor for the fiscal deficit. And also we are expecting some revenues from new telecom licenses as well.
And do you think that the finance minister will be able to trigger capital formation and private capex by adopting the right policies this budget, as corporate India has been silent for 2 years on the capex front?
It's been very difficult actually for corporate India to invest because of just the high interest rates, and then the borrowing costs for corporates have been very high. So what we've seen is actually a lot of projects have been put on hold. Now this is there are a lot of moving parts here, and also not a lot of margin of error at this particular time for the Indian economy. So what we do expect is that any good news on the fiscal deficit front could allow monetary conditions to become a bit looser, and this is going to be good for investment in India, and also less government investment as well should be a positive step to allow the corporate sector actually to make more investments themselves.
And Simon, lastly, what to your mind are some of the measures that the government can and should take in order to send the right message across to the foreign investor community and encourage more portfolio and direct investment into the country?
Well, as far as the investments are concerned on the portfolio side, then there has been a lot of confidence already this year. People have seen that Indian equity markets have been quite severely undervalued and oversold. So as far as the foreign investors are concerned, they're going in there with a portfolio management mindset in terms of seeing the valuation, seeing the growth prospects, for example. So I think those flows are already there, and the domestic investors are going to need also to have confidence in the economy going forwards. As far as the direct investments in India are concerned, then these more structural measures in terms of the reform agenda, the ability to execute, for example, the ability also to keep the fiscal deficit down, these will be also very important. So I think the government needs to press ahead with its reform agenda over the next couple of years, and then we might see areas where more FDI is welcome, for example, and that would be very positive, give a very positive signal.